Hi, traders. Today I have the pleasure of speaking to my trading warrior brother, Tavi Costa. At Tavi Costa, he's a partner at Crescat Capital. He's a partner and he's also their macro strategist. It's been a long time, Tavi, all the way back to the end of last year since I've talked to you. Great to have you back. I'm very interested in what you're thinking in here. Thanks for coming back to Trade Gate Hub, Tavi.
Coach, it's my pleasure to be here. It's always great talking to you.
There's a lot for us, a lot of ground for us to cover. The recent sell-off in gold, 4,200 S&Ps, maybe the dollar and yields could pull back. But you know what? I want to acknowledge when my guests make forecasts and come in with ideas that are good and bad. Okay, so I mean, a lot of hosts won't even remember what you said to them 2 weeks ago. But you were here December 29, and you were bullish
wow.
Brazil. Okay, so you wanted to be. You gave us some nice currency pairs to participate in, and you were long Brazil against Japan. Very nice move. Recently starting to roll over, and the other trade was long Brazil against the yuan, which again was here. From 125 to 150, big trades, Tavi. Congratulations on that.
Thank you. Yeah. Although there's a lot of things have changed recently, but this is very, very interesting moves indeed. And if you step back and look big picture, probably just the beginning of bigger moves personally. But
okay, so this could end up being this is a weekly chart. Could end up being a pullback to buy, and you would think that the trend might still be up, or do we have to get through some type of liquidity squeeze? I wanted to ask you about something that I've seen recently, and I've heard you talk about it, and it's market structure. A lot of people are worried about market structure, which has to do with liquidity and bids and offers and how markets trade. And I noticed before we get to gold that this big day that silver had last week, Tavi, this day right here, a huge range. We were up at almost $1 on the day, closed 40 lower by the end of the day. And we're headed towards 20, but this is not normal trading. Maybe at a top, maybe at a bottom where they're spiking and reversing, but mid-range to have something like this tells me there's an issue with liquidity. And then this happened yesterday, and people don't know if it was intervention or not when they took the yen down in a blink of an eye, 250 pips, and since has recovered. So now it's not just silver having little flash crashes. Now it's happening in yen, and people are saying it wasn't even intervention. So do you have concerns about just the structure of the market, that it doesn't take much to create these huge air pockets and flash crashes due to that we don't have easy money anymore?
Yes, and I would point out to the fact of how much destruction we've had in collateral value of fixed income recently.
Oh my gosh.
What is that going to do? I mean, I think the media has been all over the 10-year yield, but as a trader or an investor, what really worries me is corporate bonds, for instance.
Corporates. Okay.
We haven't really seen, we've seen they moved independently, but relative to treasuries. In other words, credit spreads are sub 2%. Does that make sense? I think.
Anyways. So here's your corporates, LQD. You're looking at TLT there, and here's LQD. They look pretty similar. They're taking out last year's low, and this is about corporations and what those bonds. I mean, they already have duration problems with treasuries on their books, but and then the strength. Maybe you could explain this to me, Tavi. And I don't think this is a good sign, because this has been the strength of the interest rate bond class, the asset class. The high yield has held up so much better. You know, you have corporate and sovereigns taking out last year's lows and high yield holding up better. Is the market saying that they feel there's a better chance of getting paid back by junk than by the U.S. government or corporations?
I don't know if it's that, or my suspicion is perhaps the market is buying those with the idea that that's likely to be further decline in rates in the near future, and therefore they're locking in those somewhat of a small premium in those more risky instruments.
All right, so they're just going for yield, right? They're reaching for yield, and that's why the money flow is there.
Boy, I mean, a number of liabilities we have, and yields are, I am of the view that if rates just stay here and they don't need to move, I don't believe credit spreads will stay where they are. I think credit spreads are one of the best macro trades, being long treasuries and short, LQD, for instance, is an interesting idea. Because I just can't believe. So you look on Twitter. Right. Yeah.
Go ahead.
No, I was just going to say, you look on Twitter, there's a lot of people prematurely, in my view, speaking about potential intervention of the Fed on the Treasury market. But let's be honest, nothing has really been breaking yet. Nothing. I mean, markets are still healthy relative to the uncontrollable move in interest rates we've seen so far. And the bigger question is, once something breaks, yes, then the Fed will probably step in. So in my sequence of ideas of how to position here, I'm not sure buying treasuries is a trade, because something needs to break first. And so in my opinion, you want to look for what is likely to break. There are lots of potentials. It could be on FX. Who is selling these treasuries? Number one. It could be
the
a lot
Fed.
of people. But
the Fed. I saw right on your Twitter pinned tweet that the Fed is also a seller. Right. So they're exacerbating this. All they have to do is stop selling, right?
They're not selling it. They're just letting it mature. But
okay.
But which is some people love to go deep into the technicality of that, but it doesn't really matter. They're not buyers, is your point, right? Right. And that's a very important point. But recently there has been a little more than usual, and there has been a lot of, somebody had a chart of $240 billion being issued of treasuries in one day. So they're flooding the market, and I don't know if it is Japan. You look at the Japanese yen, it's trading at levels that were trading prior intervention times. You look at the UK, the gilts are trading at levels interest rate wise that we saw the prior panic. So there are a lot of potentials for some other central bank that is in deep trouble having to look at the Chinese yuan. Is another one as well. I mean, you look at the differential between the 10-year yield in the US versus the China. It has never been this high. And you look at that relative to the yuan, it's the same trade. But it suggests that yuan has further devaluation to go. So in my opinion, one needs to be focused on what is likely to break because of the moving rates. I happen to believe that credit spreads, I've never seen something break where credit spreads stay sub 2%, never. And so
that's a long time.
Yeah. And so, if you want to be long volatility, but volatility is getting expensive, what is cheap out there for volatility? Well, credit spreads is pretty cheap. And, do you want to be short LQD on your own? Probably not. You want to hedge that by being long treasuries. And does that make me a bullish on treasuries? No, I'm not bullish on treasuries, but I think that corporate bonds relative to treasuries need to have a bigger move. And so I'm betting on that something breaking. Yeah.
Okay. Well, let me give you a candidate. Okay. It's pretty textbook here in S&Ps. I was talking about it for a long time, that up here, that 4,200, which was the breakout to the upside where we had the parabolic move with AI, etc. That'd be a natural spot for us to come back to in a correction and have it be the battleground. There's lots of confluence there. You have the 200-day moving average, you have fib levels, etc. Underneath 4,200, I think there are tiers. So
Mm.
could it be a risk-off event in equities? That could be something that breaks, something that would spur people to finally look at treasuries as an alternative, because people have said, well, it doesn't work. It hasn't worked. I mean, you've gotten decimated from where TLT was 170, and now we're trading where we are at 85. So could this be a candidate for something that breaks, or will it be the BOJ because of unsuccessful interventions, and they have to let go of yield curve control? Would
Well,
that do it?
as you know very well, there's a difference between being right and expressing that view in the markets the right way. And I
Yeah, big
think
difference.
big difference. Let me tell you a few things that I think will happen that I'm not betting on it because it's really expensive risk reward wise. It doesn't make a lot of sense to me. I think you can see further devaluation of the yuan given where rates are.
Okay.
I think that's a possibility. Implied
That they
vol.
may just let it go is what people are worried about.
And I don't know, Coach, if this is a geopolitical move personally. It's
Everything they do is a geopolitical move.
absolutely. And
You know that the US cannot even we just lost the company that ships all our tonnage of military hardware. They're not going to do it for the US anymore. They're getting closer to China. The US military has a major logistic, you want to talk about supply chain problems. How about when it comes to national security?
Yeah.
Okay, so China, everything they do is geopolitical, in my view, in my extremely accurate and humble opinion. But
Yeah, and I think developed economies are facing a chronic debt crisis with entrenched inflationary forces. And translating in simple words, that means to me the Fed has two problems. One, treasury demand is falling, and that's an issue. And number two, inflation. Well, now there's a few things you can create demand for treasuries. One is create a shock.
yeah,
If you have
yeah,
a shock, you create, deflationary shock. I'm referring to like, oh wait,
yeah,
you create demand for the long end and so forth, and that's
right.
that's one route. The second route, doing QE. I don't think they're ready to go that route yet. I think something needs to break for them to go that route, and something hasn't really been breaking yet. So,
Isn't really the something risk? And, risk on is the something that has to break for this to happen. And isn't that what they're attempting to do and have been attempting to do since they started on this regime? Because our economy, the market, the financialization of the market is very reflective and reflexive of what's happening in the economy.
yeah.
People see their portfolios up, they'll take that vacation. They see
Mm,
it down, they're worried about what they're paying for eggs.
mm.
What do you think?
Well, I think there's a possibility of that. Boy, I've never seen a time with well, you can say this every time you're on air, but it's I think there's so many dislocations right now. It's hard to find cheap volatility. Clearly, if rates stay where they are, volatility is expensive in a lot of pockets. But there are some areas where you can express that view well. Mega caps is potentially one. Just mega caps underperforming the overall market could be another way to play this as well. I think there's a potential for that. I think
Okay.
we're early stages of that.
All right. Can I show you an example of what you just said?
Yeah.
So Amazon peaked a week and a half ago up
Yeah.
here. I don't know if it was earnings or what, but it lost 15% in a week and a half.
Mm.
This is not corrective action. This is a broken stock now,
Yeah.
where you sell rallies.
Mm.
We all know Apple. It's pressing major support at 170.
I love that short, by the way. The Apple short is one of my favorites.
All right, so if we get under 165, I'm looking for 140, then 115. So one bad apple don't spoil the whole bunch, girl. Osmond Brothers.
Yeah.
you know, you don't remember it. You're too young. Anyway, all right. So that's taking the air out of megacaps. So what led the way up could lead the way down.
Yeah, but you got to be careful, right? Because Nvidia is another example of a short that looks pretty obvious, but at the same time, the volatility there, it's not as cheap, and so it doesn't deserve as high of a position. I think Apple looks interesting. Even Berkshire, nobody wants to bet against Warren Buffett.
Right.
That potentially could be another one as well.
That's our biggest holding, isn't it?
Yeah,
Apple?
that's another way to short Apple. Correct.
Okay. So you really think volatility is expensive with the VIX being under 20?
No, I don't think vol is expensive, but I'm looking for the big asymmetric bet. And I look at credit spreads; they look a lot more attractive than VIX. So let's just let's just say you put a chart of VIX relative to credit. I should put that together, and credit spreads. Yeah, you will see that there's a spike in VIX, and right, we haven't seen the spike in credit spreads. So what gives? Is this VIX too expensive? I'm just going to answer your question. I don't think so. So I think credit spreads are too cheap, and so we have a very a huge move in yields, and bonds should be having more vol, and we're not seeing that. And to me, that's kind of shocking. Because if I think something is going to break where rates, I honestly think that the Fed is trying to allow 10-year yields to rise above the Fed funds rate. I do think they want to have,
depression,
steepen the yield curve a little bit. And if that would be the case, I mean, look back in history, how many times in the last recessions contraction in the economy coincided with the steepening of the yield curve after inversion.
Right. Right. So that's starting to happen.
Yeah, I think so. It's funny that sentiment shifted from, from hard lending to soft lending, and now
no lending.
Yeah, to no lending, and it's now time to go back to hard lending and think about that. So I'm trying to think about some other, oil is having a big move today. One thing that is off the radar as well that is interesting to me is nat gas, and I think I'm 2 days old to give that as an idea, but I think that nat gas has potentially a lot more upside. I've never seen as well a time when, because I think commodities sort of, forget about this recession idea right now, but think about how this commodity cycle has played out, and it's very interesting how we've had things jump into a next commodity. So you have basically a lumber prices kind of initiated everything, or oil really initiated, and not lumber prices, then agricultural commodity prices, then you had ammonia prices, then you had oil going crazy again, then we had gold go to new highs. So, kind of things kind of shift away from one to another. So when you find a commodity is really, historically depressed in terms of prices more recently, which is, in my view, nat gas, I think it's
got a very long base, and it's been very quiet. And they say markets top with violence, bottom in silence, and it's definitely been kind of a very quiet, subtle. It's been silent.
Have you seen
pretty silent?
This new bill that was passed that we're not going to have any more, everything is going to be electric stoves, and everyone's worried about the demand for nat gas and so forth. Wouldn't that be classic if right
Yeah.
when those headlines come out, NetGas actually has a run. And no, I really believe markets work that way. So I like that kind of off position, you know, lots of skepticism and negative views on it. And it's
Okay.
to me doesn't reward
Well, you've got
yeah.
some candidates here, Tavi. I know you're long-term bullish gold, so
Yeah,
we're almost back at the March lows, which was a level I've been talking about for a while. Look at that. I mean,
yeah.
you know, how many days in a row? I think you have a comment that gold is, and that was yesterday, that gold is the most oversold since 2018.
Yeah, and by the way, gold is not a trade for me. It's I own properties with gold, and I don't own
Okay.
gold itself. I love gold. I think gold is near a cycle, and if that's the case, we'll probably see a commodity cycle too. So that to me is I hedge my position on gold essentially because I'm very long gold. And I've been long gold for a long time through properties that have gold in the ground. I think gold is every time you have a sell-off like that, you want to step in because I've never seen a time where there's so many tailwinds macro-wise, and you want to be in the front of that every time you have a gift like this, in my opinion.
Okay,
So
you feel the same way about silver?
yeah, I feel the same way about silver. I think silver is following silver for a long time. Silver does not respect any technicals. It's almost like it does it on purpose. It breaks down right when your support line is right there, and you're like, oh yeah, this is a perfect time for me to. It doesn't respect that, and then it starts moving.
Okay.
Uh,
Doesn't silver really need a bear market in the dollar to get going? So we may as well talk about the other elephant in the room that could break things.
dollar.
I think we're due for a pullback, but look at how we just saw those red candles in gold.
Yeah.
Look at the weekly on the dollar.
Right.
Now one red candle, I think this is a new record of 12 or 13 weeks in a row to the upside.
Yeah.
So
So
where's your head at in the dollar? Are we ending what could be just a retracement bear market rally in the dollar soon?
look, I don't get caught up in stuff like that, right? I mean, I don't get caught up on something that is so overbought like that. I mean, I'm not going to get in front of this right now. That would be a stupid move in my view, but that is something that could break that you're saying, but the price of that to break is expensive now. And I don't know. I mean, I think we haven't seen DPAGs in fixed regime currencies in a very long time. And there's a very, very high probability of that, particularly at a higher interest rate environment where, collateral value of those bonds decline, and you have, the quality of balance sheets being under question, and you're going to see some speculative attacks on currencies. And so, this is kind of like the 90s, right? In terms of that. And I think there's a potential for, I'm looking for what is cheap right now I saw this trade a few days ago that I loved it, which is very much against my view because I have a very long commodity hard assets book. I have to hedge that position. So, somebody came up with this hedge, which was shorting the Mexican peso. And I thought that was interesting, because, I think we shifted away too much. I mean, put the Mexican peso there, and it's a quite interesting trade just because it's one of the most.
It'll also go up US dollar max during risk off, right?
Well, yeah, but it's surprisingly, right? I mean, look at that move in the Brazilian real that we've had as an example. How in the world did that happen with interest rates moving the way they did? That just defies logic and gravity, everything. I mean, it's just anyone with a little bit of experience in the market would have faded that view because
it looks like the VIX.
Yeah. So anyways, I thought this was so you got the dollar peso now. Yeah, you got the dollar peso. So I think that's an interesting idea, just because it's maybe one way to find cheaper vol, because a lot of people have shifted their views and thinking we're not going to be importing from China. Actually, we're going to be importing from Mexico, although it's the same thing because it's coming from China. The narrative has shifted. I love when narratives change like that, and it's like there's no reason for it. You want to be kind of fading those headlines. And so I thought this was an interesting idea, personally, as a way to hedge a long resource book. I've been waiting. I've been a big proponent. I've been speaking with my parents and so forth that I'm waiting to buy a real estate in Brazil, because I believe in that, not only on the currency side but also on the asset appreciation side as well. And I told them, but I'm not coming in, at these levels of the dollar. I think we're going to have every thesis is at some point challenged, and we haven't been challenged in the Brazilian thesis in a big way yet. And that will happen, in my opinion. And regardless if it is a corruption scandal or a spike in yields that causes a further pressure in Brazil. And as you see that happen, I think you want to come in, because that's the correction, not the beginning of a movement where Brazil will worsen.
Where in the country would you be looking to buy property? And would it be like to live, another home, or would you buy agricultural land because maybe this commodity cycle will eventually hit grains, and maybe you'll become a soybean farmer?
So maybe you don't know this about me, but myself, Crescat, and my partners, we acquire the 7th largest silver mine in the world, in Bolivia.
Wow.
And so that's, I'll speak my book, but that's a private company. We bought that, and we leveraged that up because you can get prepaid inventory as debt to allow you to buy equity on something. And we used that. We did a leverage buyout and purchased that from Sumitomo, the Japanese company. It's in Bolivia. It's the largest private employer in Bolivia. So when I'm talking about silver and people are like, "Oh, but silver hasn't broken out." Yeah, I'm busy. I'm trying to accumulate as much as I can, because I believe in that trade long term. And so, for me, it's not a breakout. I couldn't care less if I hope it. It gives
Takes
me more time.
Yeah,
So
more time to find more veins.
Yeah, I'm looking for more. And to your question, Bolivia looks interesting. Everything has a price. There's a political risk, and if the price is right, we're interested. Brazil looks really attractive. I think you can find things in Peru. I think you can find things in Chile. I'm not as bullish on Mexico, and I'm not as bullish on Colombia. So yeah, those are kind of my areas where I'm looking to expand my wealth and assets of my clients as well into. And
does your silver company trade publicly?
No, it's called San Cristobal. You probably heard of it. It's San Cristobal is anyways, it's it's also a zinc mine. It's one of the largest zinc mines in the world as well.
Okay.
And
good for everyone's prostate.
Well,
zinc. I'm kidding.
Zinc, yeah, for COVID reasons.
And colds too.
So, it's an industrial metal, but also part of this green revolution metal too, and likely to become another. There's zinc battery technologies and other things, and but it's one of the highest silver concentrates you can find in the world, and so it's extremely high demand for those types of concentrates, and why we purchase the assets of very world-class production and management team. So at the right price. I mean, I think we bought it for one-time free cash flow. So where do you find that, Coach? I mean, not in FANG stocks, I'll tell you that.
All right. So you know what I think is great about what you do? You walk your talk, and put skin in the game with your ideas. And instead of just putting out an idea and saying, see, I was right. So you have a feeling that we're going to end up, the U.S. is going to end up having to use financial repression again. Can you explain to the viewers what financial repression is, even though they've already lived through it?
I think yeah, that's true. I think the imbalances are too large for us to not go back to. I mean, you think 2 years ago, and you ask people in the markets, would the Fed raise rates to 5%? Everyone would say, no way, we've got too much leverage, everything is going to break. And now you've got the opposite. Everyone, you're starting to see Rick Santelli come out and say we're going to see 10-year yields at 13% and all that. And look, maybe that's possible, especially if the structure of the debt in the US is very small on the 10-year yield side. So meaning right now, long-term bonds, long-term treasuries are about 12% of the overall debt. Okay. If we make that 2%, who cares if 10-year yields are trading at 15% yield? They're a small percentage of the interest payment of the government. So now that could potentially work. If we, right now, T-bills is about 15%, which is one of the largest percentages in history. Every time we see that, it's usually during a recession. And why is that? Because the T-bill market tends to absorb that more in a better way. So thinking about how will the debt structure look like 5 to 10 years from now is absolutely critical to have a view on other things. And look, it's no surprise, I don't understand even why somebody would be running for president right now, because it's, we're going to have some big issues. I mean, in 3 years from now, basically 50% of this federal debt is going to have to be reissued and at double the interest rate that we were in now. We're seeing all these problems with deficits, and we haven't even seen green revolution, reshoring, all that happen just yet. So I'm very concerned about those imbalances, and I think more and more we're going to see the need for intervention from the central bank side, and going back to, there's a big divergence in policies. You have fiscal stimulus going, up on a straight line, and you have the Fed's balance sheet or central bank's balance sheet going the other way. And which one's lying? I think that is the central bank's balance sheets. I don't think we can continue to go lower on depleting those reserves. And so at some point, there's going to have to be some level of buying from central banks, and that's called financial repression in general. And when that happens, I don't believe hard assets will be trading where they are. And so this is why gold, silver, it's not a trade for me, although I do like as a trade now. If you
it's a currency hedge for you.
The currency hedge for me?
It's a currency hedge
for you. Absolutely.
That's what it is. It's a fiat hedge.
It's a way out.
Okay.
It's a way out of this mess. And I don't see how gold doesn't trade way higher than where it is now. Forget about the 15%, 10% decline. I don't know how gold 5 years from now, 10 years from now won't trade higher. Silver won't trade higher. And if I am of that view, I want to lever that up because I don't like buying gold.
Will you buy the miners? Because even the gold bulls won't touch the miners anymore.
Well,
they've been so beat up, and I think they're getting very attractive here now.
Coach, I would agree. And honestly, it's funny when people say, well, Tavi, but look how the miners are trading. They're trading terrible. And it's like, when was the last time the miners were trading at premium, at very lofty premium multiples? And the answer was at the peak of the prior gold market. Where are we? Are we at the peak of the gold market? I don't think so. And so why do you expect that to be the case? And yes, there's some really bad issues happening in the mining space of the majors, the big ones. They're basically, if you look at global production for gold, it's declining, meaning they're starting to say, we don't want gold anymore. We actually want copper because that's what institutions want. Oh, that's what happened in the 70s. Gold production globally was declining, despite the fact gold was rising in prices, despite the fact interest rates were rising in the 70s. So in the early 2000s, we saw the same thing as well. Gold production was falling, and most of the majors were not producing as much as you would think. And so you have kind of a similar setup supply-wise. I like that. I think but
I mean, here's a couple that I'm looking at. I just pulled up the copper. I make a joke that Dr. Copper is being sued for impersonating a bull market.
yeah,
But here's a couple miners that are pretty much
I never heard that one.
they're I made it up. So here's AG. It's been a bellwether. It's what kept me out of the long side of uh, silver for a while. But look at this formation that's setting up in AG. Rising RSI, falling wedge. I like that. I like B2 gold. I think a trade at.
Oh, I like that one.
You like that one?
Yeah, because they're being aggressive. They're buying assets.
Oh,
They're
and
busy.
here was your natural gas chart I couldn't find earlier, but look at this base.
Oh man, come on.
Huh? Look at
How
that.
can you be bearish on this? All right. I mean,
Yeah.
it's like, I don't know. Yeah, we had 4 days basically, of green candles. I can see there. Maybe, be careful. But I think there's a bigger move here. Not, I don't think this is the end of it.
Maybe it's not the widowmaker. Maybe it'll be that the widows find new husbands as it rallies.
Well,
so
size it appropriately, right? I mean, this thing moves. You don't need to size this massive. But
so here's BTG. I just thought I'd show it to you. I'm thinking that if gold trades 1780 or so, and the general market sells off, that we could flush it one more time towards 2.5. I'm a buyer. So those are a couple I'm looking at.
Have you had discussions with, sure you did, with some billionaires and asking questions about how they made most of their capital? Majority of the answers are they found a distress opportunity.
Yeah.
And they were patient. They accumulated assets in it, and they played it the long term, the 5 to 10 year. And guess what? Now they killed it. And market is, I feel like investors are almost, chasing distress opportunities all the time, and they're like, oh,
they're too micro.
Yeah, it's Bitcoin is distress, or commercial real estate, and maybe they are. But what is really distress? Tell me how we're going to reshore, revamp manufacturing. We're going to have a green revolution. We're going to reduce reliability with China. We're going to improve affordability of housing by increasing supply and building more homes. How do we do all that with metals and mining continue to be an insignificant portion of the economy over time? I just don't understand how we go from A to B. And so the pathway there is accumulate a distress opportunity, and that's a distress. I mean, you're looking at the public market. Have a look in the private market. You will see it's even more distress.
Okay.
It's
all right. That's good to know. I think it might be. I promise all the guys I work with, Tavi, that once gold and silver got down to these levels, they wouldn't hear me talking about the short side of it for at least another 2 years. So that tells them what I think. And I've been trading both sides of the market. I'm not afraid to short gold and silver when I see it, but I'm through being a trader in it now, and I'm looking to do exactly what you're advising: is accumulate a little at a time, diversify, and this is my way out in my fiat hedge. Is in gold and silver and the miners, physical and the miners.
Yeah. And just for the viewers, I am not buying silver here, although I think it's a great trade. It's because my book is too large already on those things. And every time we got liquidity and there's something smart to be done, we'll do it. But that's usually not on the back of a 15-10% decline on silver or gold prices, or upward move in gold and silver prices. Is really because the value of a property with resources in the ground is trading at pennies on the dollar. And, it doesn't matter if I pay 10% more,
right.
It's just, that's kind of meaningless, really. So I have to think about how do I think constantly, not on that chart, but more, how do I hedge my other side? And so that's why I spend more time thinking about treasuries. And
the miners wouldn't mind a break in energy prices, would they?
No, not at
That would
all.
help, huh? I mean, that would help your operations if energy got cheaper. You know, a lot of people are talking a super spike. Maybe we've peaked and we're going to head down again.
You know, it's funny. I had a meme that I posted on Twitter on oil in January. You know, that was like a huge line of buyers with a sign saying oil at $130 a barrel, and
Right.
then not a single person in another line with oil at $70 a barrel. And then
Right.
a couple months later, we're again approaching what 90 or
Yeah.
$100 a
Got to
barrel. So
95. Yeah.
and now everyone wants to be a buyer. It's
Yeah.
really interesting. And same thing happening with gold, right? I mean,
Yeah.
at 2050, the whole world was like, oh yeah, gold is a no-brainer and all that.
Yeah.
Now
It's
we're
a layup.
$1,800, and everyone's like, oh, it's going to 1,600, it's going to 1,500. And it's like, man, I just don't get it, that this whole mentality. Of course, you don't just buy everything on it at once. You build your position. At least that's the way I do it. But it just
Well, I'm
backward
grateful
looking.
for those barometers. And if you like to fade barometers, everyone's buying this break in S&P 4200, and we close under it. There will be tears. I think we could see 3,900 into the eclipse mid-month. And that's my astronomical call. And what an excellent conversation we had today, Tavi. I love talking to you because I could ask you everything.
Oh, I mean, I love talking to you as well. You have very, very good questions, and I just really enjoy having a conversation with you, Coach. It's also believe it or not, I learn a lot from you, even though you're not really answering questions, you're just asking questions. So it's always insightful for me as well.
All right, Tavi, and hope you have a great fall season. And you want to leave us with a currency trade? Do we still stay long Brazil, or what do you think? Oh, you long the peso. You like USD MEX long.
Uh well, that was a call option idea, but
Okay.
um I think my trade would be long. Boy, I'm gonna take a trade. I'm gonna take a trade, even though I'm not doing that, just for the viewers that are looking for something. I think the gold CNH is gonna trade a lot higher 12 months from
Okay.
now.
All right. Gold against the won. All right.
We'll see. We'll see.
All right. That's an exotic. Thank you. Thank you, Tavi, so much. It was great, batting the ball around with you. My trading warrior brother, Tavi Costa, follow him on Twitter at Tavi Costa. Go to his website at Crescat Capital, and he's part of my intelligence gathering. So keep an open mind. It'll keep your account open. Thanks, Tavi.
Love that.
All right, buddy.
Take care.
Adios. See you,
Bye.
man.